Hey everyone, my name is Jack, and I wanted to go over the major team members that should make up your real estate team when you go to buy a home or really any property. Real estate is a true team game. You'll never be able to buy a property completely by yourself, even if you buy in all cash. Each deal has a lot of moving parts and is subject to many regulations, and you can't manage them all. So this begs the question, who should be on your team? Well, before we get into that, please be sure to hit the like button if you want to see more content like this, and so other people can see it too. Thanks. The first person besides yourself is your agent. When you want to buy a property, a real estate agent simply helps you to shop for properties. Agents come at all different skill levels and generally are geographically specialized, which means that someone based in Los Angeles would probably not be too knowledgeable, or at least as useful, when it comes to the San Francisco real estate market. It also goes without saying that you should make sure that your broker is licensed within the state that you're looking in. Agents have access to the multiple listing service, or the MLS as it's often called, and they can use that to search for listed properties. Everyday buyers don't get access to the MLS itself, although you can search for most listed deals through larger online providers like Zillow or Redfin for free. A broker makes his or her commission from the listing seller's listing fee. When people put their properties on the market using a broker, as most people do, their listing broker gets a percentage of the sales price as a commission. If the listing broker finds a buyer for the seller themselves, the listing broker keeps the entire commission. However, when a buyer's broker brings a buyer to the listing broker and the buyer's broker generally split the commission about 50-50. The important note here is that the seller is still paying the same amount of commission either way, and the buyer is not paying anything to use the buyer's broker. So it's advantageous to use a broker when you're shopping for a property. They don't cost you anything, and they can give you useful perspective on the local area and can access some of the tools of the MLS. Perhaps more importantly, they can help connect you with other buyers, sellers, and the eventual other members of your team should you not have them at the ready. Good agents can be tough to find. It is relatively easy to become a broker after all, but it does take a lot of hard work to become a good one. And consider reaching out to local brokerages and trying to find a broker who's very familiar with the local market and ideally in the neighborhoods that you're looking for. If this is your first deal, you want someone who can help you through the process and clear up many of the questions on steps for making a deal or for finding something that fits your needs. That said, unless your broker is licensed to practice law, they should not be acting as your attorney. Agents are not allowed to give legal advice or draft legal documents unless they are licensed to practice law. They can obviously speak to their experience, but check over riskier legal questions with your attorney before moving forward should any of them arise. Your broker should act as a useful guide, but should not supersede your attorney. Now, if you pick a broker and you end up not liking them, don't hesitate to consider finding a new one. That goes for any member of your team. If there's someone who fits into your plans better, do what you can to move them onto your team, and if that means getting rid of someone else, do it.
Do it.
Your broker is one of your main contacts throughout the deal, especially during the early stages, so make sure that you pick the right fit so that the whole process gets off on the right foot. For those of you who don't know, I'm a real estate agent in the Chicagoland area. If you need someone to help you find your next place, I'd be happy to help. Check out my website at jackduffleyagent.com if you're interested, or if you have any questions on getting started and you're looking to buy a place in the Chicago area. Now, another extremely important member of your team is your lender, unless of course you're buying all cash, in which case you could skip this part. Closing takes as long as it does for most deals because the lender needs most of that time to make sure that you and the property are worth the risk to them. But how do you find a lender? Well, simply put, you have to ask around. There are tons of lenders out there, some institutional, some not. If this is your first deal and your credit history is rather new, but still strong of course, you should probably opt to use a traditional lender rather than someone offering a different type of creative financing. But there are exceptions that can be made. By traditional, I mean banks and credit unions and that sort of thing. These businesses deal with mortgages all the time, and they are a significant aspect and sometimes the vast majority of their respective businesses. Whichever lender you pick, make sure you do your homework first. Now, in your search for a good lender, you'll find that there are numerous to choose from. Some banks, like the big national chains, may offer very strong rates, but may have stricter standards, especially thanks to what happened leading up to the 2008 crash, when everyone and their dog were able to get a very risky mortgage. Banks have much stricter, more regulated standards to try and avoid the catastrophe that was the recession, but no promises. Smaller lenders might have a little bit more flexibility in who they can lend to. but generally they're subject to federal standards as well, especially when they are using FHA, VA, or other government-insured or standard loans. Before you actually begin searching, you should know what kind of financing that you're looking for. Are you planning to live in the property when you close? If so, maybe an FHA loan might be a great option so you can keep your down payment minimal. Maybe you're investing directly through an LLC. If so, you'll want to find a lender that offers mortgages for LLCs specifically. There are a lot of different types of loans that you can get. See what your specific lender offers and weigh the options. Different loans have different perks. Some require very little down but have higher fees, while others offer very low rates and require a higher payment up front. It's important to watch out for those hidden fees, by the way, especially if you've not used a particular lender in the past. By asking multiple lenders about their rates and fees, you can determine whether or not the lender you're planning on using is giving you competitive rates in your market and is charging reasonable fees at that. If not, it's very likely that it's time to move on. Just be careful. The next member of your team will be your attorney. Your attorney functions as your chief informant. He or she should typically be the first to let you know about an issue with title, property taxes, or some other issue with the property. A good attorney can also be great in helping to answer questions you might have about the types of legal risks that you might be exposing yourself to with a real estate deal. There are two types of attorneys you should consider for any real estate deal: a real estate attorney and a commercial real estate attorney. Both types are specialized for real estate transactions, it's naturally in their name, but avoid using a general practitioner or a firm that's not accustomed to doing real estate transactions. A traditional real estate attorney will be able to help you with your typical residential deal, from inspection all the way to closing. A commercial real estate attorney, if applicable, will be the one that can help you to create your entity structure and work on the more complex issues that come with things like non-residential deals. Depending on how you purchase your deal, a commercial real estate attorney can help you to set up your LLCs to best protect yourself from personal liability or whatever entity you're using that might arise out of running rental properties. In the event that you're using owner-occupied financing, you'll likely have to purchase the property in your own name. Definitely review this issue with your attorney before you move on with the deal. A commercial real estate attorney, as opposed to a typical residential real estate attorney, might be overkill for a smaller single-family home bought in your own name. Commercial real estate attorneys are typically more expensive as well. They're specialized to work on more complex deals, so their time is theoretically worth more, and that would mean that they probably wouldn't be working on single-family homes very often, so they'll charge you more. However, once entities are involved or the size of the deal becomes significantly larger, it might make sense to consult a commercial real estate attorney instead of your typical residential one. Otherwise, you'll likely be totally fine using a solid residential real estate attorney on your first deal if you're just trying to buy a home or a smaller property. Whichever type of attorney you use, again, he or she should be specialized in real estate transactions. An attorney who helped you draft your will isn't necessarily the best resource for actually working on your real estate deal, and neither is an attorney who normally helps you get out of traffic violation tickets. Errors by your attorney during the buying stage can carry massive long-term consequences that you want to avoid. You want someone who knows what they're doing in the real estate area specifically, and that will help to avoid those issues. All of that said, the attorney's role tends to be on the back end. Attorneys deal with the title company, the lender, your agent, the other side's attorney, the homeowners association if applicable, in collecting everything necessary for closing. Attorneys also play a key role in adjusting sales contracts during the first stage after getting something under contract. If there are any title issues or other legal issues, your attorney should bring it to your attention. At closing, your attorney will probably be present and will help walk you through all of the mortgage and title documents. And if you're doing a remote closing, which is becoming increasingly common, you may be able to go through all of those documents and sign them without actually having to be physically present on closing day. Regardless, your attorney should be the one who points out any discrepancies and clears up any questions before the end of the closing of the deal. You can think of your attorney as your most trusted advisor during the buying process. They should know the intricacies of the deal and be able to spot actual or potential issues with the materials that they are given or that they find in preparing you for closing. Now, some states actually don't require attorneys to close a real estate deal. Even if you don't have to use one, you should strongly consider hiring an attorney anyways. It's an extra line of defense for you and probably is worth the extra few $100. If you don't use an attorney, be sure to find a solid title company to work with, since they'll be doing a lot of the heavy lifting anyways, depending on whether or not the buyer or seller selects the title company in your state. Each state is a little different, but the title company and the attorney on a deal usually keep tabs on each other and share a lot of information to make sure that the title on a property is clean and that everything is generally in line prior to closing. Either way, if you need a real estate attorney, consider asking your agent or someone else that you know if they've had a good experience with one. One of the best and really easiest ways to add a quality member to your team is to ask around, as opposed to diving into a long Google search and guessing who is actually good. Just ask someone you trust for an introduction. Now, when your offer is accepted and you actually get under contract and you get close to buying a property, you'll also definitely want to get a good property inspector. No matter what type of property or its size, it's always a good bet to use an inspector. Inspectors typically must go through pretty rigorous licensing and need to know how to spot otherwise hard to find problems in a piece of real estate. Once you have a property under contract, you should have your inspector take a look at it as soon as possible, specifically during the review or due diligence period, as it's often called. This is because you should have the ability to back out of the deal if your inspection or your walkthrough of the property is not up to snuff. Your inspector should take a look at the building and point out anything that might be out of line. The inspector will typically send over a written report with a recap of his or her findings after the inspection. You can also forward that report to bring up the property's problems with your attorney and can use the flaws to potentially negotiate credits at closing with the seller. A credit at closing is money that the other side will give you at the end of the deal. It cancels out part, if not all, of your closing expenses. It's like a coupon given you by the other side. You say, "Hey seller, I don't like this thing that the inspector found and I'm considering backing out of the deal if you don't fix it. Can you give me some money to repair it with a closing credit?" Ideally, they'll say yes. But if they don't, then you could probably back out of the deal, again, without penalty. This does depend on what's in your contract, but that's generally what's typical. Why would another side give credits at closing? Well, sometimes inspections may reveal new problems that both sides might have been unaware of when they initially negotiated the buying price. Rather than start over with a brand new contract, the selling side can agree to just throw in a credit at closing for the buying side to just keep the deal moving along. Often credits can be negotiated at the beginning of a contract to cover many aspects of the closing costs depending on the seller's motivations and the state of the actual property. They're simply an added level of negotiable flexibility. It's much easier to avoid disaster and negotiate credits in when you have an inspector on your side. One of the last members of your team will be your insurance agent. If you've already bought insurance for other things in the past, you should probably start by reaching out to your trusted insurance agent to ask for homeowners insurance policies. If you don't have an insurance agent or you dislike your current one for whatever reason, find a new one.
Do it.
An agent will be able to walk you through your policy options. Depending on the type of property you're buying, you should adjust your liability coverage accordingly. A lot of insurance companies offer bundling for different types of policies, like home and auto insurance, for example. You should consider taking advantage of these sorts of discount programs if it makes sense to use a provider that you happen to already be using for another type of insurance. Either way, make sure you're covered so that if someone trips and falls on your property, or if it gets damaged and needs repairs, you'll be covered by your insurance policy. In short, real estate is not a solo game. There are a lot of moving parts to get the deal from start to finish. In order to succeed, you can't attempt to wear every hat. Let an expert handle their specific area and you'll be able to succeed much more easily. As a buyer, you definitely should utilize an agent familiar with your area. You'll also need a trustworthy lender as well, and you'll also need a real estate attorney and a licensed home inspector, and you'll also need an insurance agent or someone who can supply you with a homeowner's insurance policy. If the house happens to need some repairs or updating, you'll potentially need contractors as well, like electricians, plumbers, painters, or carpenters, among many others. That said, if someone is not performing well, you might opt to switch that person out. If someone else approaches you with his or her services and you trust them, you might want to find a way to adjust your team to make room for them.
Do it.
Every member of your team should want to see you succeed. After all, it's in their best interest too. Most of them only get paid if something actually closes. Certainly be conscious of their biases, but know that they're going to put in the effort to get you to the closing table after sorting through any obstacles. Once your team is ready, it's time to go on the property hunt. Well, that's all I've got for today. If you like this video, please like it since it helps the channel out a lot. If you want to see more content on real estate, investing, the markets, and other personal finance topics, be sure to subscribe so you don't miss any new updates. And if you need a real estate agent in the Chicagoland area, please don't hesitate to reach out and visit my website at jackduffleyagents.com. But until next time, take care.